Hi, this is Jim Cunningham. We're going to talk about an update on the Corporate Transparency Act, what you need to know now. There has been a recent federal appellate court ruling that lifted the stay, sort of the national stay. So if you're a business owner, if you're in charge of a business, if you're managing a business, this is really critical information. So this is a federal law that was effective January 1 of 2024. There have been two federal lower courts that have lower in the sense of the federal trial court have halted enforcement. The latest one, the second one, halted enforcement nationwide, and then the Fifth Circuit Court of Appeal lifted that halt, meaning corporate transparency is back on. It's very important that you pay attention to this because the deadlines have shifted a little bit because of this second trial court ruling that delayed implementation of the Corporate Transparency Act. And we're going to cover that. But the bottom line is, it's probably best practice to just go ahead and get your company registered if you haven't done that already. And it's literally millions of companies have not done that. And all the smart kids are saying this could melt down the computer system at the Financial Crimes Enforcement Network. So I would get in this done as soon as you can. If you own or manage a company, you really do need to pay close attention. The violations are up to $10 million and 2 years in federal prison. If you're watching this on YouTube, please subscribe to our YouTube channel. We'd really appreciate it. The key takeaways from this video that we're going to be covering today are: what is a reporting company? A reporting company is a company, an LLC, partnership, or corporation that has to provide company information if it is created by the filing with the Secretary of State, and we'll talk about what that is. This applies to pretty much all small family businesses. Okay, so if you're a small business, if you're under $5 million a year in revenue, it's going to apply to you. So if you're a bigger company, it doesn't apply, but this is a real gotcha. So if you've got an LLC that's got a rental property in it, you're going to have to comply with the Corporate Transparency Act. So very, very important. Company applicant is a human being. So this is a human being with a heartbeat, a living person who has directly filed the document that created the entity. This is the person who is responsible for filing. So if you set up that LLC, you went online and you went to the Secretary of State's website, you're the person who's required to report that. If you're a lawyer who did this on behalf of a client, you may be as the lawyer on the hook for reporting unless you have a separate agreement with your client. The reporting company, so this is a company applicant, this sort of reporting company must complete the beneficial ownership information form or beneficial ownership information report. Beneficial owners are people in control of the company, or own 25% or more, and that has to be reported within 30 days of acquiring that 25% interest. So it gets a little dicey if you have a trust, maybe an irrevocable trust, somebody's passed away, and there are multiple beneficiaries of the trust. That is where you probably want to get a lawyer involved on that, quite frankly. If this is just you and your company, I think if you're a fully functioning adult, it is not that difficult. We're going to go through this. It's not that difficult to do this on your own. But if you're just too busy and don't want to deal with it, certainly our firm can help you with that. So I'm Jim Cunningham. I'm a partner at Cunningham Legal. I've been an attorney for 30 years. We have offices throughout the state of California. I'm a certified specialist in estate planning, trust, and probate law, real estate broker, securities, insurance licensed, and a pilot single engine land. I'm also a business owner. I own Cunningham Legal. So that's another. So I'm looking at this as well as somebody who has to report. Whether I have to report or not to the Financial Crimes Enforcement Network. Disclaimer, this is a big one. I'm a lawyer. This is information, and we do these videos often to help educate the people, help educate you. But please do not take this as legal advice. I'm just a person talking. This is not, and when I say you, there's no attorney-client relationship. So what is the Corporate Transparency Act? What is it? It is a bipartisan federal law that was enacted requiring many businesses to report on their beneficial owners to the Financial Crimes Enforcement Network. This is under the National Defense Authorization Act. This was a bipartisan bill. Unless the Supreme Court says we don't have to do this, I don't really see Congress unwinding this. It looks like it would have to come from the Supreme Court to say, nope, the government's gone too far on that. And we're going to cover some of the logic a little bit later in the video. This expands anti-money laundering laws, and this is intended to help prevent and combat money laundering, terrorist financing, corruption, tax fraud, as well as other illicit activities. So all that stuff that the government does not want you doing with money, That is the design. That is what this is designed to do. Is it's designed to catch the bad guys, all right? So if your entity, so these are, we're getting into the rules and we're going to cover this in a little bit more in depth. If your entity, meaning your corporation, your LLC, your partnership, if you filed something at the Secretary of State, and this is maybe a little bit of a hitch and to get along, a general partnership, you do not have to file with the state. But if you have a general partnership, you can file with the state. You can register that general partnership with the state. There are a lot of reasons why you might want to do that. That probably then falls under the Corporate Transparency Act. So I would say if something is required to be filed at the Secretary of State, then you are going to be subject to the Corporate Transparency Act. So when I say Secretary of State, I'm talking about the individual states each have their own secretaries of state. So we're not talking federal. This is where if you were to set up a California LLC, you go to the state's website and you set up your LLC and you get you file your LLC 1 and you get your documentation proving that you've created an LLC. That's when you need to file under the Corporate Transparency Act. If the entity was created before January 1 of 2024, you've got to comply by 2025, okay, by January 2025. If the entity was created in January 1, 2024, or some other time in 2024, the rules are getting a little complex. So if it was created before September 4th, so January 1 to September 3rd, then you have to file your you have to file right now. I mean, it's due with just 30 days after you create your entity. It's due. But if it was created September 4th to December 3rd, that deadline's been extended to January 13. And if it's created December 3rd to December 23rd, you get an extra 21 days attached to that January 13. If it's created on or after January 1, 2025, 30 days after the entity formation. So again, I wouldn't get wrapped around your axle on this. And I'm not giving legal advice. If you have an entity that was created in 2024, I think it's best practice to just go ahead and file it with the Financial Crimes Enforcement Network. That way you're not going to be behind. And if you say, gee, I really don't want to do that, I know I should be filing, I know what the deadlines are, I'm going to sort of wait and see what the courts do. You are running the risk that you're going to blow through one of those deadlines and be subject to these fines and penalties. So I'm a lawyer. I have to advise people, broadly speaking, to follow the law. I think it's probably safest. Certainly you need to know the deadlines. You need to follow these deadlines because this is what the government has said the deadlines are. But I think best practice is probably just go ahead and do the filing that is required under the statute. So what is FinCEN, Financial Crimes Enforcement Network? They're designed to protect the financial system. And it's very important. This is a very important branch of the federal government, is to keep our financial system working and not let criminals use it to further crimes. So how does it relate to the Treasury Department? It is Treasury's mission is to maintain a strong economy, and it's related to the Treasury. Very serious business. This is about the integrity of the financial system. So again, very important governmental interest. The question is, has the federal government gone too far? And we'll cover that toward the end. Who's required to file under the Corporate Transparency Act? So we talk about companies. All domestic and foreign companies registered to do business anywhere in the United States must report. So if you created your entity in California and you don't leave California and all your business is in California, yes, you must report to the federal government. And this is kind of one of the arguments in there. It's like, well, wait a minute, this person's not even engaging in interstate commerce. How can the government ask for this information? So any corporation, LLC, partnership, this would be general partnership, limited partnership, and limited liability partnership. Again, if a filing is required at the state, business trust, or any other domestic or foreign entity that's formed or registered under the laws of the United States or any state or tribe and has at least one beneficial owner. And the human who files with the Secretary of State, who files that initial filing, is the person who must report. There are 23 exemptions that will cover. What is a beneficial owner? What does that even mean? What does beneficiary mean? What does beneficial mean? Well, this is the person who kind of owns the shares of the entity. So if you have a corporation and they own shares, or you have an LLC and they own a membership interest or membership units, whatever you want to call it, you can also call it shares. LLC is very flexible. A partnership would be a partner in a partnership. So this is the person who owns this interest. It's a natural person, directly or indirectly through any contract, arrangement, or understanding, relationship, or otherwise, exercises control over the entity. So if you own 5%, but you're managing it, yeah, you're a beneficial owner. Or if you own 25% ownership or more. So if you have 5 partners and there's no one has, they're 5 equal partners and everyone's 20%, no one controls it. Arguably, you're not having to file under the beneficial, you're not going to have to file that report. But if there are 5 owners who are the beneficiaries of a trust and a trustee who controls the trust, arguably that trustee would be the one who would have to file the beneficial ownership report because the trustee is in control, right? If the trustee is running the show. So it gets a little more complex with trusts, and I think that's the point at which it makes sense to engage an attorney to help you walk through the issues. So if you're a trustee of an irrevocable trust with multiple beneficiaries, I think it's a good idea to talk to a lawyer. But again, if this is just you and you own, a rental property in your LLC, I think you can handle this filing on your own. I'm not convinced that you really need expertise on this. So Owen has Maple Street LLC, which owns an apartment building on, you got it, Maple Street. So Maple Street LLC has no employees and gross revenue of $100,000. Owen must report to FinCEN. So again, this is the gotcha for the small business owners, for the people who aren't necessarily running a huge operation. It's a little counterintuitive, right? You would think, well, gee, this should be for bigger companies. Well, those bigger companies already give a lot of information to the government. I guess they kind of already have it. So the government here, the feds are rooting around trying to get information on these smaller entities that they're concerned they might not otherwise have. So what isn't a beneficial owner under the Corporate Transparency Act? A beneficial owner does not include a minor child if the information of the child's parent or guardian is reported. So if a minor happens to have an interest, which doesn't happen that often, the parent or guardian reports. An individual acting as a nominee, intermediary, custodian, or agent on behalf of another individual. So this would be like an agent under a durable power of attorney. They would be reporting that beneficial. That's not a beneficial owner. The person who actually owns that, right? The person who may be granted the authority under the power of attorney would be the person reporting. If the individual is acting solely as an employee of the entity and whose control is derived solely from the employment status of the person, so that's not a beneficial owner if they're, the president of a corporation that owns shares in another entity, that is not considered a beneficial owner. Any individual whose interest in the entity is through inheritance or a creditor of the entity, unless they're exercising control. So this might be the individual whose only interest in the entity is through an inheritance. Again, it's a little tricky. That's where you might want a lawyer coming in to identify, look, is this an interest, right, that's coming through an inheritance? That would be like a probate estate. So Mike manages Main Street LLC, which owns a self-storage facility on Main Street. Mike has 20% ownership interest in the LLC and has substantial control. The LLC is owned by 4 other partners, so this is a little bit like our example before, each of whom owns 20%. So everyone owns 20%. Main Street LLC is a reporting company. A beneficial ownership report as to Mike's interests, but not the other 4, because Mike controls the LLC. So you have 4 passive owners. Mike's going to report. You're going to have to report the company. So you might have a situation, if no one's in control, the company has to report, but there's no beneficial ownership information component to it. So again, a little more complex. What are the penalties for failing to file? Money and jail time. So liability for failure to comply with the Corporate Transparency Act. If you willfully provide false information or fail to provide complete information or fail to update information, you're subject to fine and imprisonment. Companies that fail to comply with the Corporate Transparency Act reporting requirements may be subject to civil penalties of $500 a day, up to $10,000, or 2 years in prison. Complying with the Corporate Transparency Act. So when do you report? It's going to vary. Again, we covered this a little bit at the beginning of the video. It's going to be covered when it has to report based on when the company was formed. So let's look at this a little bit deeper. If the company was formed or registered before January 1, 2024, so anytime before up to December 31, 2023, the initial beneficial ownership information reporting deadline is January 13, 2025. So if the company's formed or registered during 2024, the company must file the initial beneficial ownership information report within 90 days of formation or registration, but there are exemptions in the next slide. If the company's formed or registered on or after July 1, 2025, the company must file the beneficial owner information report 30 days after receiving actual notice or public notice that their creation or registration is effective. For companies formed in 2024, if the company was formed between September 4 and December 23rd, with the original filing deadline between December 3rd and December 23rd, Those companies now have until January 13 of 2025 to file. So look out, that LLC one that you filed when that the state said, it was filed September 5th. I'm just making this up. You're going to have until January 13, 2025. If the company was formed between December 3rd and December 23rd, you have a 21-day extension beyond that date. So again, whatever, if you were December 8th, it looks like you would be January 18th on that. So you're going to have to do the math on that. Companies that qualify for disaster relief may have extended deadlines beyond the January 13th date. Why? These 2024 deadlines are a result of recent developments, including a brief pause in reinstatement of the Corporate Transparency Act requirements. Hey, if you have a company, if you have a small company, you really need to stay informed about the potential changes to these deadlines. This is actively working its way through the appellate court. It's gone the Fifth Circuit Court of Appeal. Next stop, U.S. Supreme Court. If it goes there, probably will. This is kind of one of these cases that probably will go to the Supreme Court. Just make sure that you want to stay in compliance because you don't want to be subject to those penalties. I think it's safe to act as if the Corporate Transparency Act is valid. So how do you comply? You go online, just Google BOI FinCEN. This is the boiefiling.fincen.gov. Or you can contact our law firm, Cunningham Legal. We're certainly helping clients with this. And then it says, welcome to the beneficial ownership information filing system. And this is where you file your report. And you go through, this is going through a series of web pages where you're completing information, an initial report. Are you correcting a prior report? Are you updating a report, right, if somebody moved, or a newly exempt entity? So if you have questions on this, you can contact us at 866-988-3956 or team@cunninghamlegal.com. And if you go, this is just too much to deal with, I don't want to have to deal with it. Beware of scammers. Companies are still making false claims about their relationship to the government. And as BOIR.org, they're still running ads. It's fake. No, it's not even connected to the government. So really watch out, pay attention. Look, we're all adults in this sort of working our way into the mid 21st century. We all know that the importance of avoiding scammers. There's like this form 4022 or form 5102. FinCEN does not have these forms, okay? There's no U.S. Business Regulations Department. That entity is a scam. Don't click any suspicious links or attachments or scan any QR codes. FinCEN does not send initial correspondence regarding the Corporate Transparency Act penalties by email or over the phone. Do not submit payments by phone, mail, or websites as requests. Like if asked, if prompted, go to the FinCEN website itself. And if you need any help on this, feel free to reach out to team@cunninghamlegal.com. What information is reported under the Corporate Transparency Act? So what are you having to give the government? Well, companies must submit a beneficial ownership information report to the U.S. Treasury's Financial Crimes Enforcement Network, and this contains full name, date of birth, current residential address, and passport number or other government-issued identification number like a driver's license. So what ID qualifies? A non-expired U.S. driver's license, right? A non-expired U.S. passport, non-expired identification document issued by state, U.S. territory or possession, local government or Indian tribe. And if none of these exist, a non-expired foreign passport can be used. An image of the document must also be submitted. So again, this is requiring a level of technical acuity that not everyone has. I mean, I just think of some people who are less technical than others. How on earth are you going to, upload an image, a scanned image to this portal? And for some people, that could be challenging. So what information is reported? The beneficial owner, it must be reported, is any individual who exercises substantial control. So if they're in charge of it, or owns or controls 25% or more of the reporting company's ownership interest. Changes in beneficial ownership, including address changes, must be reported within 30 days. So if you change address, you got to report it. If you're managing an LLC with 4 owners and one of those owners moves, you need to let them know, hey, if you move, you need to tell me because it's on you if you're the manager of that company to report that to FinCEN. What information must be reported under the Corporate Transparency Act? So companies, what are we talking here? The legal name and alternate names to the companies. This is as recorded in the Articles of Incorporation or LLC-1, the document in California that you use to create an LLC, or whatever the documents that were used to create or register the company. You got to include that name. DBA or trading as name. So For example, Cunningham Legal is James L. Cunningham Jr. Inc., DBA Cunningham Legal. So that both of those are reportable under that example. Don't abbreviate names unless an abbreviation is part of the legal name. So it's very important. Another one, just an insider tip. When you set up a company, I would avoid use of commas and punctuation, like a period in the name, just helps you out when you file for your taxpayer identification number, which you have to provide. If the entity does not have a taxpayer identification number, if it is a disregarded entity like an LLC, and you have not gotten a taxpayer identification number for that disregarded entity, you would use the social security number of the owner of the shares of that LLC, the jurisdiction or formation of the first registration, and current U.S. address. So company applicant, FinCEN ID, if you are a company applicant, so if you're applying on behalf of a company and you're reporting, you have to have your own FinCEN ID number. So if you have a company and you're the one reporting, you're going to have a FinCEN ID for you as well as the company. So if you don't have a company applicant number, go ahead and fill out the form. You only have to do this once. Once you have that number, keep that in a safe place, kind of like a social security number. You're going to be using it quite a bit in the future when you report to the FinCEN, right? So legal name and date of birth, current address, and a form of ID that you have to upload. And then who are the beneficial owners? If it's a minor, it's the parent or guardian information, and the beneficial owner FinCEN ID number. If you don't have it, fill out. You got to fill out the form. If you're a beneficial owner, you have to get your own number. And then if you're an exempt entity, it's a little bit of an exception, and they walk you through that on the website. Residential address, and then again, form of identifying information, form of identification and issuing jurisdiction. So beneficial owners, you're going to have to get IDs of these people, right? And not every minor has an ID, so I think that's a little bit of the logic on the guardian. But these are non-expired IDs, okay? Compliance reminder, so the willful failure to report complete ownership information subjects you to civil and criminal penalties. Important legal cases for the Corporate Transparency Act. So what is going on in the world? So the first one was National Small Business United versus Yellen, and this is in March of 2024. A federal court in Alabama entered a final declaratory judgment that the Corporate Transparency Act exceeded the Constitution's limits on congressional power. The Justice Department, on behalf of the Department of the Treasury, filed a notice of appeal on March 11th, and the individuals and entities named in the case are not required to report. Just the people named in the case are not required to report the beneficial ownership information at this time. So limited not only to Alabama, not only to this federal district, also just to the particular litigants. So just the people, National Small Business United versus Yellen, just those plaintiffs are exempt from the Corporate Transparency Act. That was the first case. Then there was Texas Top Cop Shop, and we'll talk about on the next slide, is one of several cases that challenge the CTA pending. There are a lot of lawsuits filed across the country, and several district courts denied requests to enjoin the Corporate Transparency Act. So this is just one case. A lot of other federal judges say, look, we're not going to halt enforcement. So enjoin is to restrain or to keep people from doing something. We're not going to halt enforcement of the Corporate Transparency Act, but because the government says it's constitutional, and the Department of Justice, but one court did. So one court did say we're going to put a national ban on it. And then the Department of Justice filed a notice of appeal on December 5th and separately sought a stay of the injunction. So let me just walk you through a little bit of procedure here. You have a federal trial court that says the government has to stop the enforcement of the Corporate Transparency Act nationwide. That was a federal judge. By the way, federal judges have a crazy amount of power. A federal judge is like the U.S. president. They have this. They're like equal in power to the U.S. president and members of Congress, that federal judge. They have very, very broad powers. This judge said, I am halting enforcement nationwide of the Corporate Transparency Act, one person. Well, of course, the Department of Justice appealed, and then they said, well, wait a minute. We want the Fifth Circuit Court of Appeal to enjoin or to stop the federal trial court from stopping enforcement of the Corporate Transparency Act. So it's a little bit of Simon Says. The federal court said stop, and then the Fifth Circuit Court of Appeal said go. And so we're back on. Now, this is a 10th Amendment argument. We have the Constitution, 10 amendments. The 10th Amendment says all the powers not delegated to the United States are reserved to the states, meaning in our system of government, power resides with each state, and the government only has those powers that have been enumerated under the United States Constitution. And so there's an argument in there that this is overreaching on the part of the federal government. I'm not advocating one way or another. I'm just trying to tell you what's going on in simple terms. So we don't know where it's going to go. It might be that the Corporate Transparency Act is enjoined for certain types of corporations, but not for others, or certain types of business entities, but not for others. And it may be that we're back on and everyone has to report, and it may be that the entire thing's shut down. We just don't know what's going to happen. Probably will end up going to the Supreme Court. So Texas Top Cop Shet versus Garland, December 23rd, 2024, the Court of Appeals for the Fifth Circuit reversed the injunction saying, hey, lower court, I know you stopped enforcement of the Corporate Transparency Act, that you put a pause on it. We're going to lift that pause, and now everyone in the United States has to report. So it's enforceable, but with these new deadlines. So the reason for the change in the deadlines is because you had a Texas order standing, some time went by, and then the appellate court said, oh no, we're going to lift that halt on the Corporate Transparency Act. So that shifted all the deadlines out based on the time that this was all working its way up between the Texas trial court and the Fifth Circuit Court of Appeals. So that's why we have those kind of screwball dates, is because this is part and parcel of the appellate process on the federal level. So what are the new deadlines? Let's recap the new deadlines. So the old deadlines are out. So if this is very important. So if you're looking at another video on YouTube, you want to make sure look at when that video was published, because our information is current, and I'm recording this the day after Christmas 2024. So bear in mind, there are deadlines that are new. They help people who have to comply with the Corporate Transparency Act. But again, probably just safest to comply based on the old deadlines. But where are we right now in late December 2024? Companies registered before 2024, the deadline is January 13, 2025. So you got an extra 13 days. Companies registered September 4th or later, on or after September 4th, you have until January 13, 2025. And if you're registered December 3rd to December 23rd or 24th, you have an extra 21 days. So, or December 3rd to 23rd, you have an extra 21 days on top of the January 13th. So potentially into early February, something like that, February 2nd. So somewhere between January 13 and February 2nd, depending on when you filed. Now, the reality is a lot of people wait until January 1. So if someone comes into our office and they say, I want to form this entity, December 20th, we'd say, well, gee, if you wait till January 1, you're going to save a little bit of administrative hassle, maybe another tax return if you have a January to December year. But some people do file in December for other reasons. So be that as it may, you need to pay attention if this is a new entity, when that entity was filed and when you need to deal with the Corporate Transparency Act. So there were some, financial, FinCEN has some exceptions. This is the hurricane responses. So Hurricane Milton, Helene, Debbie, Beryl, and Francine. You've got a little bit more time there if you're part of those disaster areas. So just check that out if you are. Again, if you can file, it's best just to file on time using the old deadlines. You're safest there. What are the Corporate Transparency Act exemptions? There are 23 exemptions under the Corporate Transparency Act. 19 are government, financial services, and accounting. Large operating companies, this is more than 20 full-time U.S. employees. And this excludes employees of affiliated entities. So this is if you have a company and you've got an operating company and then maybe some other type of company that holds capital assets with employees. So we're going to exclude those. If you've got 5 million in assets or above, you're exempt and have an operating presence and physical location in the United States. So our law firm, we're 40 people. We don't have to file based on these requirements in our particular organization. Other organizations might have to file if they had less than 20 employees or less than 5 million in revenue or less, or did not have a physical office. So again, a lot of companies are fully remote. If you do not have an operating presence at a physical location in the United States, you're going to have to file. Does that mean if you have remote employees working in their home? Maybe, I don't know. Again, this is, you probably need to talk to a lawyer. Arguably that is an operating presence presence at a physical location, but if it's also within the residences of other people, I don't know what the rule is on that, but I think that's something you would want to check out. Subsidiaries that are wholly owned directly or indirectly by the foregoing exempt entities are exempt. So any entity created January 20 or early 2020 or earlier and not engaged in active business. So if you have a stale LLC, not owned by a foreign person, and there's been no change in the preceding 2-month period, you've not received $1,000, more than 1,000 in the preceding 12-month period, and doesn't otherwise hold any kind of assets, then you're exempt. So if you kind of have this dormant LLC, you're going to be exempt. And these are some resources here we'll put in the links on our video here that you're watching. The key takeaways: a reporting company must provide company information if the company was created through the filing with a Secretary of State. So this applies to most small family businesses. So there's a reporting company. The company itself has to report. The company itself has to report. A human has to report the company. That is the company applicant. And this is the person who got who did the registration, who created the company. That is the person who's responsible for filing. Then there's another beneficial ownership information report that's required to be filed if a person owns or controls more than 25%. So if it's just you with a piece of property in your LLC, that is a reporting company. You're the company applicant, and you have to also file a beneficial ownership information report because you own 100%, right? But if you control an LLC, that's you and 4 silent partners, and everyone owns 20%, you still have to report because you're the manager. You're in control of that. So you have to file the beneficial ownership information report. You need to look at your deadlines for reporting. Again, we've covered these here. If this is all just a bunch of like foreign legalese to you, you can give us a call at Cunningham Legal and we can help you with this. But again, I think on the simpler ones, we can maybe even teach you how to do it so that you can go ahead and make sure that you're complying with the law. So is consulting with the lawyer enough? I think you need an A team. This is part and parcel of running a business and engaging in some pretty sophisticated legal activity in the United States. I would say having your CPA, financial advisor, and attorney is critical 3 components of your A team. Read Savvy Estate Planning. I wrote a book, Savvy Estate Planning, What You Need to Know Before You Hire the Right Lawyer. Covers all things estate planning. If you have a company, you are even in greater need of having a complete, updated, and I would say simplified estate plan. We're going to cover that in the future, what I mean by a simplified estate plan. Meaning, make sure your trust is funded. Keep it simple for your heirs. Make sure you follow all the rules. By following the rules of a complex plan, you're actually simplifying the estate plan. And estates over 5 and 10 million might benefit from what we call advanced planning strategies. If you earn over $1 million a year, certainly some advanced income tax planning strategies, rather than just having a living trust-centered estate plan. We have offices throughout Northern and Southern California, and if we're watching this on YouTube, please subscribe to our YouTube channel. Just keep watching this video because the next video is going to magically roll right after this one. Thanks for joining us.